the stock exchange had a finish. Then you had the central bank on the other side. It's called Fast and Furious. On the FX market and exchange rates, we're getting news from the Bureau de Change operators that the Naira closed better today because of the news that the central bank will start selling FX to the Bureau de Change starting on Monday, the 31st of August. Meantime, the Form M reform by the central bank has been applauded by the National Employers Consultative Association, which is NECA, applauds the central bank, but cautions the central bank and offers some advice. We'll talk about that. Meantime, we have 3 new payment service banks, 9 PSB, Moneymaster PSB, and Hope PSB. Those are the first 3 licensed by the central bank, and that's 25-page guidelines for this new banking or financial services to raise financial inclusion. Meantime, FX says to BDCs will start on August the 31st, and it's going to be done twice a week, Mondays and Wednesdays. And second quarter, capital inflows, the bad news, Nigeria's inflows, 77% underwater, $1.2 billion against $5.3 billion in the previous quarter. So that's just talk a little bit to this capital importation numbers and the FX markets. Let's just talk to Paul Alaje, who is a senior economist at SPM Professionals. Is joining me live from our studios here in Lagos. Good evening, Paul. It's good to see you.
Thank you so very much. Good evening.
Well, we got the second quarter GDP, a negative 6.10%. This is inflation keeping at about 12%. Then this is your capital importation report. What's your take on this, just to tee off this conversation?
Well, the reduction, significant reduction from what it was, more than $5 billion capital importation, which of course was attracted by portfolio investment, FDI, and more importantly, other investment. So, but what we have this time is far lower, about $1.29 billion. That's significant reduction. And in fact, if I can break the figure down a bit, portfolio investment, which took the lead in the previous quarter, which had about 4.3 billion attraction, now had only $385.32 million. And that's significant because almost $4 billion has been eroded from what we had in previous quarter, just Q1 of 2020. Apart from that, foreign direct investment, which of course is a very investment that many Nigeria would expect, also had a significant emaciation. Other investment, which was not so significant in last quarter, this quarter took a significant position. Of course, from 1.3 billion to 761 million US dollars. Clearly, we all should expect the kind of investment report that we have, particularly capital importation. One, because for portfolio investment, Monetary Policy Committee had reduced NPR. And a lot of people, I remember the last time I was here in the studio with you, I mentioned the possible implication of review of NPR from 13.5% to 12.5%, even though that will help economy grow. And I understand Monetary Policy Committee was preparing for negative growth that Nigeria had, which of course was eventually reported by National Bureau of Statistics, minus 6.10%, which was what Monetary Policy Committee was expecting, and have started preparing for that by creating liquidity in system, etc., through rates and so on and so forth. But what we forgot to understand is with lower rates, particularly NPR, it will form a discouragement for those who might want to invest within our system. This is why we have this report. Monetary Policy Committee reduction, monetary policy rate, I beg your pardon, reduction by 1%, while US dollar rate significantly, even though it was still close to margin, but because of belief in the US dollar, and I'm happy with other, maybe where we get to conversation around central bank policy, because if somebody invests in our country and he wants to repatriate such investment, they are not sure that there will still be the same exchange rate, even though they've gained 20% or 30%, as the case may be. If they are not certain of exchange rate, they might say come out as the loser.
I'm heartbroken, Paul, when you look at a country of 200 million people, north of $400 billion in GDP, and yet we're talking about capital importation figure of 1.2 billion US dollars. I'm sure Lagos State GDP can generate that amount, if you ask me. So, what does this say about the current state of current account position and the general fiscal balance of this administration?
First, what we should expect is deficits. Current account of the country is expected to be negative territory because we have not attracted sufficiently and also enough investment. Now, there is a common excuse we all can give because of the pandemic. Pandemic had so much impact on crude oil, and also Nigeria was not that of a good attraction for people to invest. Recall that over the years, most northeast part of the country have not attracted investment. So when you hear Boko Haram is striking any part of Nigeria, it is not good news. It's not good news for just a religious body, maybe Christian or Muslim, maybe northerner or southerner. It is not good news because potential investment is not going to come so long as investor, particularly foreign direct investment, when investments feel sense of insecurity to the point that they are not willing to bear the risk of coming to the country to invest. That on the side, it also worries because our current account is in horrible position. This will have implication on foreign reserve. When we don't attract enough foreign currency, Central Bank of Nigeria will not be able to pull enough defense for Naira, so we're going to see consistent and increase in devaluation. That was why Central Bank, it's not that Central Bank as a team just feel it is time for us to devalue Naira or to move Naira from 306 to 360 or 381 as the case may be. No, it is because Nigeria is not attracting as much, because from this report we saw increase significant in principle. Previous report Q1 shows Nigeria has significant increase in importation, while export significantly reduced. There is no way we can manufacture. We don't print US dollar even though we want to print Naira. But when we don't become that center of attraction for foreign direct investment, which of course requires some fundamentals or needs of doing business and so on and so forth, and if we don't attract enough because of policy, what is rate saying, etc., we might not also attract for portfolio investment, which is so very significant. And that has been the major driver of what we have in recent past.
Paul, very quickly, I will need to get out of this hole, as it were. So if we are going to dig out of this, get what you call our immune system right in terms of where are the low-hanging fruits for the Buhari's administration to rebalance the current situation?
The low-hanging fruit, I think we have ignored them for a while. Now we advise government to quickly focus on alternative source of revenue rather than depending on crude oil and businesses around it. Over time, Nigeria has depended on portfolio investment, and the pandemic, which no one saw coming. We didn't see it in Nigeria. Many countries of the world, in fact, were not expecting the pandemic to happen. The impact was evident on our exchange rate today. The impact was evident on job losses. Now, to show you the money,
yes.
The money is available in what we reported as negative, which is manufacturing. The rest of the world is coming back. America is coming back really fast, and it's attracting even investment. China have started attracting investment. Japan is attracting investment. They're attracting investment because they know the money lies with manufacturing.
We need some quick money. Do you think manufacturing will fetch us that money in 30 days, in 60 days, between now and December?
Well, I don't think manufacturing can give us. See, fast money leads to hell.
Give me the fast money.
Fast money leads to hell, and it's not sustainable.
We need it right now because there is no FX. The country is sinking.
Yes.
To put it mildly.
The country is sinking, yeah, to put it mildly. I think that's the right word to use there. To put it in a nice way, we say the country is sinking. But you and I know that Nigeria's situation is worse than just say the country is sinking financially, to be clear. So what I think government could also do is to start some level of partnership with private sector. We've seen something like this happen between federal government and Dangote's group, and I think we need to do more of that. There are quite a number of things we can do in terms of finance, revenue generation, and also before we start Africa Continental Free Trade Agreement, what can we do locally? I think those are the options before the federal government of Nigeria, and they can start supporting Nigerians as it were right now. Again, for us to save what we have, which is not sufficient, I would say Central Bank of Nigeria might have just started taking right decisions since this week, Monday. And from what I saw, I think we might just have to conserve and reduce pressure on FX.
Let's talk about the central bank's fast and furious. When we come back after the break, everyone stand by. Paul Alaje is still here with us. You're watching Arise Exchange. Fast and furious central bank is throwing virtually every tool it has into the foreign currencies markets as the country's FX reserves come under intense pressure. Paul Alaje of SPM Professionals is still with us on the show. Paul, let's continue this conversation. Let me show you very quickly some of the reforms you just talked about before we went on break about the central bank. From M reform, just in the last few days, FX sales to BDC will resume effective August 31st. They also set rates for international FX money transfers, plans what you call them, open market operations, US dollar-based home auctions. This is the first to get foreign investors in. Now they have a new guidelines also for payment service banks and license 3 new PSBs. I'm getting swamped a bit. Help me out here about where we left the conversation around what the financial central bank was supposed to do and why it's throwing everything into the fire just to quench it.
Well, I think central bank has never been this active since the beginning of pandemic, and I think this is the best time Nigeria International Airport will be resuming shortly, which means there will be both need for FX and there will be receipt of FX coming from those that want to exchange their foreign currency to make use of the local currency naira in Nigeria. What will be the exchange rate? A major determinant. Will Nigeria accept what is going on in the parallel market, which is crazy? Before this announcement, we are seeing approximately 470 naira to the dollar in the parallel market. It might not be an official market, but it seems to be popular among Nigerians. And this has to do with faith that Nigerians have in the currency they use as means of exchange, which is naira. So what central bank has done, apart from the initial announcement for removing over-invoicing and also overpricing, which is common within the market. So the good news...
You're talking about Form M.
About Form M, yes. So Form M, we have over-invoicing based on what is filled in Form M. You know, when you make transfer to foreign account, and central bank may not necessarily have a way of checking before this time what amount is stated, whether the amount is right, whether it is competitive, etc., etc. So there's a pricing system that central bank is coming up with, which is announced, of course, on Monday, and it's taking that further to say, hey, beyond this announcement, we are going to verify to know whether truly you are bringing it or not. And if you have any middleman, we're sure, you can be sure this will be removed.
And this is where, Paul, this is where the Nigerian Nigerian Employers Consultative Association, NECA, came in today and says, well, it sounds good, Mr. Godwin Emefiele and your team, but you may have to rethink this because our members could be adversely impacted by this reform.
Yeah.
How do you respond?
Well, it leaves me with a lot of worry. There's a lot of worries. We envisage that in the beginning we might have these issues. I think that central bank will also need to work with trade authority to ensure that most of the people Nigeria have been dealing with in terms of importation, we can find an alternative to going through middlemen, because the gains by middlemen is just too high, and it makes exchange rate for Nigeria to be highly unsustainable. Yes, we are almost out of the wood when crude oil prices grows as high as $50 to $60 per barrel. We'll start seeing significant, maybe steady increase in foreign reserve. But for now, I can tell you the truth, this perhaps is the only available, the viable option that Central Bank of Nigeria has. I'm also happy that NECA has told Central Bank it would like to have meetings with the authority of the Apex Bank, and I'm sure that perhaps NECA, if they appoint committee to vet, they are very experienced. They are well experienced on imports, particularly for inputs and machineries. They are well experienced, and Central Bank also has an established department to vet that. If the two comes together, we can verify whether FX is truly needed. So, but if you exempt member of NECA, I can tell you there are other thousands of demand for farm hemp that are not known. Factories are not. Yeah, so all those need to be removed. And NECA can't stop Central Bank. And I'm happy NECA has also said in its recommendation that it's going to support Central Bank to achieve this.
A quick one to wrap it up. So what do you think the whole current exchange scarcity mean for the government and for Nigerians as well as together as we head towards the final month of the year?
It means unemployment. It also means increase in poverty. It means possible increase in inflation. And I would link all of these to reveal it. Now, as we speak, okay, as of last week, paddy rates, that's paddy rice, was about 175,000 a ton. Where is the machine? So there are so many Nigerians who have seen opportunity in rice consumption. Nigeria has over 3 million rice gap. They want to invest in this, but without the machine, even though they can source local raw material from within Nigeria, but without the milling machine, without rice dryer, without rice parboiler, without color sorters, all other machine that is involved, there is no way we can improve and even drive down the price of rice in the market from 25,000 to approximately 32,000 depending on brand. Government wants Nigeria to be prosperous. That is why it has closed border, particularly to the import of rice input. What government must do today is for CBN to quickly implement the new release to say it wants to send USD to bureau de change, but it must not go beyond 386. It also wants to sell to commercial bank at 382. If this can be implemented, I can assure you that we are going to see drastic reduction, because supply this time will just challenge demand in its face.
Alaje, thank you so much. Monday, the return to the sale of FX to the BDCs will start. Let's see how it all goes from here. Thank you so much, senior economist at SPM Professionals.